Which candlesticks are important? For example, when the price reaches a certain level, which candlestick should we see to allow us to enter a trade? Stay with me until the end of the video to learn many interesting points about candlesticks. Hello, I am Tradeology, and I kindly ask you to subscribe to my channel if my videos have contributed even a little to your trading progress. Please like the videos and leave comments so that I can create stronger content for you with higher motivation. Thank you. Before I open TradingView, I need to mention some important points about candlesticks. This topic is a very crucial part of trading, and I want to share a summary of my experiences regarding candlesticks with you. If you search for candlestick patterns on the internet, you will find thousands of patterns that will not help you in your trading and will actually hold you back. I will only teach you 2 candlestick patterns that will change your trading path. And besides these 2 patterns, you won't need to know anything else about candlesticks. More importantly, we will discuss where on the price chart these patterns are significant in detail at the end of the video. A candlestick is a deep concept that you should not just memorize. Instead, try to fully understand them so that new trading opportunities open up for you. Now, let's learn the candlestick patterns as I see them and understand how to enter trades with them. The first candlestick pattern is the engulfing pattern. This pattern occurs when, for example, a green candlestick completely covers the body of a red candlestick. Then, the price is able to move upward. The fact that we should see these candlesticks in certain places before entering a trade will be explained later in the video. Here, look at this large red candlestick. This candlestick is so big that it completely covered the previous green candlestick and pushed the price downward. A large candlestick alone can be a signal to enter a trade. If this large candlestick also covers the previous candlestick, the pattern is much stronger. Pay close attention to this chart. Before I show you the engulfing patterns, pause the video and try to find these candlesticks yourself, then resume watching. The strength of engulfing candlestick patterns is very evident here. On the left side of the chart, you can see the first bearish engulfing pattern that was able to pull down a strong upward trend, increasing the likelihood of forming a trading range. Interestingly, below, the formation of a bullish engulfing pattern allows the price to move upward. If we want to indicate the engulfing patterns in this image, they are as follows. As a trader, you can enter a trade in any of them because these patterns are very strong signals of trend reversals. Also, pay attention to this example. The price was in an upward trend and was slowly moving higher. However, when this candlestick forms, which is both a large candlestick and completely covers the previous candlestick, it causes a trend reversal, and the price fully retraces. This pattern is very practical, and I recommend that you find and practice them in price charts and use them in your trades. The next very important pattern is the pin bar pattern, which professional traders wish to see every day in order to enter a trade. This pattern has a very high probability of success, which is why traders love this candlestick. The smaller the body of these candlesticks and the longer their shadow, the more powerful the pattern is. This pattern is so popular that traders even accept the risk of trading against the trend when they see it, entering trades based on it. In this chart, see the pin bar examples from left to right and observe the power of this pattern. The large green candlesticks in this area trap beginner traders into a buying trap, but this pin bar causes a massive drop in the chart, putting all buyers at a loss. What should have been done after seeing this pin bar is to enter a sell trade. Large candlesticks do not easily get neutralized or reversed. However, these pin bar patterns have such exceptional power that they cause reversals in these trends. The strength of this pattern becomes even more powerful when you find them in the direction of the trend and enter trades accordingly. Pay attention to this example. Here, the trend is upward, and the probability of success is higher with buyers. All we need to do is wait for an opportunity to enter a buy trade in the direction of the trend. I can clearly see that a pin bar has formed with its shadow pointing down, as if it is applying pressure to buy. If you enter a trade after this pin bar, or the subsequent candlestick, you will be very satisfied because this method is one of the best trading strategies. The probability of success with this method is so high that it will ensure consistent profits for you in the long term. More importantly than the candlestick patterns is where we should find these patterns on the chart and how to enter trades with them. Because if we enter trades with them at any point on the price chart and do not follow the guidelines I will mention, it will only lead to losses. For example, consider this example. There are many pin bar and engulfing patterns that do not lead to price reversals and act like normal candlesticks without doing anything special. So, what is the solution? You need to find these candlestick patterns at the levels I taught you in previous videos. Make sure to watch the videos related to trading cycles and support and resistance levels. Suppose I want to enter a trade with the pin bar pattern. I cannot just enter whenever I see a pin bar. First, I draw a channel like this. Then upon seeing the pin bar, I can easily enter a sell trade at this level of the channel. Look at this example where the price has reached the top of the trading range for the second time. Since the tops and bottoms of the trading range are very important levels, upon seeing this engulfing pattern, which completely covers the body of the previous candlestick, we enter a trade and enjoy it. Isn't that exciting? I have been doing this for years, and even now as I teach you, I get excited when I see these price movements. At every important level you have learned, and at every support and resistance level you know, if you see these candlesticks at those levels, you can enter your trades with more confidence. And as I mentioned before, try to enter trades in the direction of the trend with these candlesticks to increase your probability of success. Here's a very beautiful example. The price trend is downward, and we are looking for an opportunity to sell during price corrections. We see a very beautiful engulfing pattern here and enter the trade. The stop is placed behind this candlestick, giving us a risk-to-reward ratio of 2, which is quite sufficient for us. I have also provided an example for scalpers. In this example, the price trend is upward. The small price correction has formed a pin bar that is in our direction, allowing us to enter a trade. Only professional traders should enter in these small areas, while others can enter as shown in the previous example. I have one last example that is the most beautiful. Please pay attention to this area. We are at the bottom of a trading range, right? What do we see on the third touch? A very beautiful pin bar with a long shadow and a small body. What could be better for entering a buy trade? The price is at a very important level, and it has formed a beautiful and strong candlestick. There's no excuse for not entering. So practice a lot and watch this video multiple times, as it is the result of years of experience and effort. If this adds something to your trading knowledge, which I am sure it will, please introduce me to others and support me so that we can reach the great goals I have in educating about financial markets together. In this video, we learned what engulfing and pin bar patterns are and how to trade professionally with each of them. You won't need to know anything more about candlestick patterns. I hope you perform successfully and reach high levels in trading.